Good afternoon, everyone. Welcome to Hit the Bid here on August 17th. This is Ty Robbie here with your Week 33 Market Watch. Today we're going to be running through our charts and seeing what happened across these markets last week. We did see this cattle market continue to trade in wide daily ranges here as we adjust to this higher volatility. We do see the bulls continue to show strong demand up here near these recent all-time highs, which is a good sign for the bulls out here in this cattle market. Equity markets continued climbing new all-time highs last week across each of our indexes. Oil prices remained quiet and steady here right around the low 60s, and corn prices showing new contract lows before getting a relief rally underway late in the week. So plenty of action to go over from last week, and should have some good opportunities waiting for us here as we head into week 33. So let's jump right in and get started. First up, we got our October live cattle on the board as always. We have seen this market, like I said, adjust to this recent uptick in volatility. We continue to see some wide daily ranges here throughout the month of August. Over the last 3 weeks or so, we've seen an increase of volatility here as we kind of escaped this trend channel and snapped out of the top here. We continue to see this market kind of bounce back and forth between a loose range here between the 225 and 232 area. We are seeing a lot of characteristics of typical range-bound markets over the last 3 weeks here, so we could see this at the moment. We are anticipating this 225 to 232 range to stick here while this market adjusts to these new all-time highs. We can kind of see this market balancing out here and trading sideways, and instead of seeing a correction or a pullback through price here, we are kind of seeing more of a correction through time. Prices just hanging steady up here in this about $7 range as we are seeing these moving averages climbing up here into this area, and so more of a correction through time as this market takes a breather up here near these recent all-time highs. This big picture uptrend still remains intact, and higher prices are still expected to continue here throughout the rest of the summer and into the fall. So we wouldn't be surprised to see a breakout here continue as this market just has been resilient, and the bulls continue to show good demand here near these range lows. We keep seeing these big red days where we'll get some $7 ranges or more. We've even hit a limit on occasion or two, and the bulls continue to support price and snap it right back up there near those all-time highs. So still showing strong demand by the bulls, and higher prices are still expected to continue here in this cattle market as we head into the fall. However, we are just looking like this market's kind of taking a breather here and getting used to these higher prices and higher volatility. So at the moment, we do expect to see this 225 to 232 range continue as we head into the week. We will just have to wait and see for a convincing close beyond the edges of this range to lead the next leg. In the event of a close below 225 in this 20-day moving average, we could see a pullback get underway, but pullbacks would be expected to be bought up as this big picture uptrend still has plenty of demand and the wind favoring the bulls here still. We could see this market pull back and test this this 50-day moving average down here near the 219 half to 220 area. This is a good support level down here at 220 as well. That was noted back here from mid-July. We could see support come in down there in the event of a pullback. However, bulls continue to hold this market up here, and bids above 232 and a close above these recent all-time highs should just get that next leg rolling, and we could see these live cattle start printing 250 as we head into the fall. So that's kind of the game plan we have at the moment here is look for this market to continue trading range bound, look for good value area type buys down here and support here near this 20-day moving average until we get a close beyond either one of these edges. That will confirm the next leg, but until then we expect to see this market to either continue drifting higher or stay range bound here in this 225 to 232 area. Very typical range bound characteristics here. We've had pretty equal distribution of volume over the last 3 weeks as we've adjusted to this higher volatility. We have seen the daily ranges increase and seen some pretty fast moves back and forth across here. No real hard edges here or hard lines to trade around. We are seeing these highs and these lows all coming around general areas. So we are using 225 and 232 as the lines here at the moment, but at the moment we are still seeing some pretty high volatility, and so this 225 and 232 are more of areas. So look for resistance. Give or take a buck around this 232 area, as well as support plus or minus $1 of this 225 level as well. So just very typical range bound characteristics. So we expect to see that action continue and a steady drift higher over the long term here in this cattle market. We can go down the line here and look at some of these back months. We are seeing some of these early 26 months kind of drawing a little more harder lines here in the 234 to 227 area on this April 26 contract. Similar areas on February as well as 227 to 234. So we are getting a little harder lines here on some of those back months, but that's just kind of showing that this market is continuing to show good support and strong demand by the bulls and holding these recent all-time highs. So let's jump over to the feeders now. Same story over here. This market has just been adjusting to this recent volatility. We have seen about a 50% increase in volatility here in this feeder market, as we are seeing some pretty wide daily ranges. This range here that we're expecting to hold is this 338 to 350 area on this September feeder contract. We have seen this market continue to drift back and forth just like those fats in about a $10 to $12 range here. Big sell-offs hitting some limits here as well, but every time the bulls just continue to snap this market right back up, failing to get any downside momentum or follow through by the bears. We continue climbing this trend line here that's just right above this 20-day moving average on the September contract. So plenty of demand here by the bulls holding this market up here near these all-time highs. Big picture uptrend still remains intact. We need to see a close beyond either edge of this range here at the moment to confirm the next leg. In the event of a close below 338, we could see a pullback back down here towards the 50-day moving average. This 326.5 level would be the corresponding level to that 220 on this October live contract. So plenty of support here dating back to early and mid-July. Some of these prior highs would act as a good support level here, as well as this rising 50-day moving average should continue to hold price up and continue pushing these cattle prices and feeder prices higher as we head into the fall. In the event of a close below that 338, that's kind of the roadmap we want to follow. However, we do expect to see this range-bound action continue here, as we also have pretty equal distribution over the last 2 weeks here in this feeder market, and just kind of some areas to be aware of around this 350 and 338 to 340 area. More of areas to trade around rather than hard lines in the sand, typical range-bound characteristics as well. If the bulls are able to get a close above this prior all-time high here at 350.20, we could see this thing really snap and get this ball rolling higher up into the high $3 range. So big picture uptrend remains intact, and we do expect to see these higher prices continue as we head into the fall. We might just need to balance out here and continue to digest this recent move up through time rather than a pullback. So this consolidation up here is just holding prices steady at these all-time highs continues to be a good sign for the bulls. So look for higher prices to continue into the fall. We can go down the line here in some of these back months in this feeder market as well. Fall prices still looking strong all the way out into those early 2026 contract months as well. Prices just hanging steady up there, showing this nice strong market remains strong and robust. Look for the bulls to keep pushing this cattle market higher. Jumping over here to this December corn futures contract, we did see a nice breakdown early last week off that crop progress report, really showing a nice big breakdown on heavy volume here, pushing all the way down to 392, printing new contract lows there in this December contract. Big picture downtrend remains intact. We do have plenty of resistance overhead here, so this late week rally we saw is just a little bit of a relief rally after we've seen about 3 weeks of steady downside here, more closer to a month probably after this recent pullback up here, falling short of that 50-day moving average, but breaking down back below that 20-day moving average. We've traded about a month here of straight downside all the way to these new contract lows at 392. So this market was just kind of due for a little bit of a relief rally. Look for this upside to continue here in the near term. Early this week, we do have plenty of resistance overhead with this declining 20 and 50-day moving average, as well as a pretty heavy supply zone up here in this 410 to 415 area. So as we see prices continue to pull back up into this area, look for prices to start to balance out and bears start putting up a fight up in this anywhere from 410 to 419 area. Anywhere below this 50-day moving average, we expect to see the bears continue driving this market lower. Look for prices to balance out before committing to any new short positions, but corn prices are expected to continue getting lower, getting cheaper as we head into this harvest season. Next up, we have our crude oil market. This market has been the quietest out of all that we've followed here recently. Not a whole lot of excitement here, nothing really concerning to this market, just a real quiet, low volatility market at the moment. Very little upward pressure here expected in this oil market until we get bids above 64.5 again. We could see the best we can do for the bulls is really just kind of a range bound market here between 65 and 70. But as long as we're trading below 65, we expect to see this slow drift lower, a slow bleed down here towards the $60 mark to continue. Not a whole lot to be excited about from last week, just pretty choppy action all week long. Trading in about a $1 to $2 range. Nothing super concerning here. We just expect to see a nice slow bleed here in this oil market. One historical example to kind of follow at the moment is something that happened in late 2024 through the beginning of this current year of 2025. We did see this market settle into a nice range here between this $67 and $72 mark before seeing a nice short squeeze popping up here towards the $80 mark. That was met by some selling pressure and just a nice low volatility bleed lower all the way back down here towards the mid 60s. That took about 6-8 weeks to unfold here, driving about $15 lower with a real low volatility, pretty tight range days here. A little bit of upside here before ultimately just seeing a nice slow bleed lower. That's kind of the anticipation here following this recent breakout back here in June. Given the Israel and Iran situation, we had that nice short squeeze breakout higher, and then followed by this market kind of settling into a range, and now starting to just break out the bottom here, and which usually should result in a nice low volatility grind lower, and that's the anticipation in this oil market as we continue here into late summer and early fall months. Equity markets continued to show a nice upside last week. We did see new all-time highs across each of our three major indexes. A little bit of divergence here between the Dow and the Nasdaq midweek, though. We are seeing the S&P kind of hanging steady here, which is our focus right now. We're going to take a look here at the S&P futures. Wednesday, Thursday, Friday last week balancing out about a 50-point range here, just hanging steady right around these prior all-time highs, just getting above them, putting in a new all-time high there Friday at 65.08 on the open before selling off and putting some downside pressure into the close on Friday, closing down there near the lows. With this market balancing out here last week in this $3 range, we could see we expect to see the next leg lower come from a break below 64.60, which could get us back into pullback territory, pushing down here near back towards this 20-day moving average. This big picture uptrend remains intact, so any dips are expected to be buying opportunities. But with this balance up here for the last 3 days, price is just getting a little bit heavy at the moment. So a little bit of a pullback here would be good for this market to pick up some new dip buyers and continue marching higher. However, this week, if we do just get some bids right above 6,500, we could see this market take the next leg higher after we've seen this recent pullback to 62.40. Showed a nice 2-week rally up here to the 6,500 area. This 3-day pause here could just be this market taking a breather before getting that second leg higher after this base rally. We could see that come into play as well, as this market has been resilient and the upside just keeps on coming, and there's very little downward pressure in this equity market at the moment. So we do see some divergence here between the Nasdaq and the Dow. We did see 3 days of downside late last week, just a nice steady drift lower in the Nasdaq, while we did see a strong push here in the Dow last week up to new all-time highs. Friday's action, however, we did see that poke up there to new all-time highs before seeing selling pressure all day long and closing down there near the lows. Not a great way to close the week here, so that's what a little bit of this downside pressure in these tech stocks, as well as this swing high failure pattern that we're seeing here in the Dow, makes me believe that we could see this market start to roll over a little bit and get back into pullback territory. Each of our indexes showing good potential for pullback here with breakdowns below 64.60. We could see that downside continue in the Nasdaq, as well as a continued downside from Friday's selling in the Dow. Continue putting some downside pressure here and get us back into pullback territory where we could find some good deals on stocks to continue this big picture uptrend. What do we got for news this week? We do have some real basic news here, nothing too exciting. We do have FOMC meeting minutes here on Wednesday, jobless claims Thursday morning before the bell. Those are some big news events to keep an eye on as we head into the new week, as well as Fed Chair Powell speaking on Friday. Nothing super notable, but just some events to be aware of as we head into the new week, as we could see some volatility surrounding those events and just some fast price action. But other than that, nothing too exciting for this market to be concerned about. Look for the equity markets to keep on climbing higher over the long term. Could see pullback get underway here just here in the near term, but dips are expected to be buying opportunities, and we should see these equity markets continue climbing higher. That's all we got for this afternoon. We'll catch you guys tomorrow for closing comments. Have a good night.